Good afternoon, everyone. Welcome back. Welcome, Patrick, again.
Welcome, everybody. Today we speak about the high wall level, my favor, and we have really nice example why the high wall is so important and why I call it money printing level.
But before that, let's go into the disclaimer very quickly. All right. So as always, guys, any questions, please post it in the comment. And today, very excited. This is a very important level, and we're going to share the theory behind it. We're going to share some examples on how you can use it in conjunction with other MentorQ models. And then, Patrick, we're going to go through some real-life example in the chart. And then you're going to explain why, for you, that is kind of like the money printing level. But before we do that, let's go into the presentation. All right. So if you guys have been with us this week, yesterday we talked about the put support level. We talked about the core resistance level the day before. But just to like go into really into details, what are gamma levels? Like gamma levels are levels taken from the option positioning, and they represent reaction zones. And the chart that you see here represents really the areas or the strike prices where you have the highest positive and negative gamma. If you missed the first two sessions, you can find them on YouTube. You can find them within the academy. So we explain what the gamma levels are there. We also have a course about it that you can access. The gamma levels are divided, again, just a recap here as well, into primary levels. So we talked about core resistance and put support. Today we're going to talk about the high vol level. And tomorrow we're going to talk about the 1-day max, 1-day minimum. And then on Friday, we're going to talk about the gamma levels 1 to 10, which is the secondary level here. But let's go into what the high vol level is. So the high vol level is really a level that helps us understand the shift between gamma regime from positive to negative or from negative to positive, right? And we're going to explain why this is important in a second. But that, again, we're going to recap this very quickly. Why are they called gamma levels? Because gamma is a very important factor right here. It's one of the Greeks, together with delta and theta and vega. But basically, it really helps us understand the rate of change of the option delta of an option in respect to the change of the price of the underlying asset. And it's very key when we talk about market makers and delta hedging to understand how gamma can change during the day. The overall gamma exposure of the market can be positive or negative. If you see here, a long position has a positive gamma, a short position has a negative gamma. Why is this important? Because it really changes the way that the market maker needs to hedge, whether we are in negative or positive gamma. So let's go into the next slide. So in positive gamma, the overall market exposure is long options, which means that participants, investors, have been buying more options than selling. And that brings us to the concept, okay, so how does the market maker hedge when they are in positive gamma? The market maker in positive gamma buys when the underlying falls and sells when the underlying goes up. And they do this to obviously delta hedge their position, because again, we talked about this this week. Their business is not taking a risk, but is rather like facilitating the exchange of securities or options or stocks, etc. By doing this in positive gamma, we typically see a low intraday volatility. And obviously this is important because as a trader, again, volatility is your currency. So you want to understand if we are in a very volatile day or in a lower volatile day. On the opposite side, we have negative gamma, where the overall market is short options, which means that they are selling more options than buying. And that also affects the way market makers are hedging. In fact, in a negative gamma, the market maker hedges by selling the underlying when the prices falls and going long when the prices goes up. So this helps create those volatility loop or those feedback loop in the market where we see like sharp moves when we are in a negative gamma environment. And we can also expect, like big price swings throughout the day. All right, going back to where can we see this in the platform. So you can see the gamma condition in different places. We showed you the bot command here. One is our liquidity snapshot, where really clearly you see at the beginning of the day if we are in a positive or negative gamma. You can also look at the matrix and see at the top left hand side if we are in a positive JEX or negative JEX. So if you see a green there, it means that the overall gamma exposure is positive. If you see a red, it would mean that the overall gamma exposure is negative, and it would mean that we are in a negative gamma environment. All right. So this brings us to the high vol level, and we're going to go back to this chart, which is our net gamma exposure chart, to explain how this works and to break it down and how to read it. First, we want to look at the yellow curve that you see in the center left of the screen. This is the gamma profile, which really represents the gamma exposure for every JEX, for every strike price. And the high vol level, a lot of people refer it as gamma flip. We have our own methodologies a bit different. We believe it can help us get better accuracy on the data, but essentially is the level where the gamma profile curve changes from negative to positive. And that kind of dictates the gamma regime, which is positive or negative. So you see it here, we highlighted in the circle and the arrow. You see that this curve goes, it's kind of like, gets to the top and then goes and then follows through there. So it kind of changes from the slope from negative to positive, and that's where the level you see there, that's the high vol level there. So how do we use it, right? And then we're going to go into some example. So the high vol level can be used to identify the level below which a bearish feedback loop are likely to start, right? And that could lead to an increased market volatility. Above this level, the market conditions tend to exhibit lower volatility. So we tend to see kind of like lower movement, and you see it in the chart here. This was from this morning. I took it this morning before the presentation. We see that at the beginning of the day, the price kind of like stays pinned at the high vol level 0 DTE, and then we see a break, and that's when the volatility kicks in, and we see like a strong move to the downside. This was taken this morning. We're going to go into the chart in a second as well. Normally the high vol level can also be used as a major support level before the put support. And when the price kind of drops below the high vol level, the volatility tends to increase. All right. So again, this chart shows you that if the price of the underlying falls below the high vol level, the market makers' behaviors are shifting, and basically we are seeing an increase in volatility. If the price goes above the high vol level, we can potentially see lower volatility and kind of more stable price action throughout the day. Then one thing that we need to do is obviously look at the high vol level with the open interest. So we want to look, for example, if we've seen an increase of open interest day by day, to see whether there are more opportunities for the market to drop below the high vol level. So here we see a lot of like red, kind of like high, like very wide bars below the high vol level on the right hand side. And so you can kind of like understand, okay, where is the market positioning themselves, and what happens if the price were to drop below those levels? How much really option contract are there? What could be the effect? We can also use it in conjunction with one of our other model, which is the implied volatility times open interest. Again, we want to monitor if we see a spike in strike prices that exhibit a large implied volatility and open interest, because that also could be a magnet or a reaction zone that could happen if the price were to drop below the high vol level. Then finally, we want to also, like we talked about it yesterday, we want to look at the skew in conjunction with the high vol level. So we want to see, like, for example, for the asset that we are trading, if basically we are experiencing a bearish skew or a bullish skew. In this case, this is a chart that we took from yesterday. We see that the SPX skew on the left is exhibiting like a bullish sentiment, where the 25 delta call implied volatility is higher than the 25 delta put implied volatility. You see that on the bottom chart. And on the other hand, if we look at QQQ, we see the opposite, where the put skew is higher. So we see that the implied volatility of puts is actually much higher than the implied volatility of out of the money calls, which is a 25 delta. And finally, again, we also have the high vol level, not only looking at all expiration, but also looking at zero DTEs. So here, when we look at the zero DTE flow, we can also look at the high vol level zero DTE, and that's the one that you always see in the chart as well. And that also has a big relevance, because as we mentioned, the zero DTE options, why are they relevant? Because their gamma is really sensible, because we're so close to the expiration. So if price even moves slightly throughout the day, we might see like big volatility swings caused by the zero DTE options. Market makers and funds need to really consistently hedge their activity throughout the day, and that also can amplify the volatility in the market. And that's when we see like those potential gamma squeezes. And also, like if we have a very strong level with a lot of open interest and a lot of volume, we see sometimes a pinning effect, where basically the price kind of stays stale on that level. And that we saw that in the previous chart also today on the high vol level. And then obviously it's very important for intraday trading and speculators as well. All right, so let's go back to the chart. So if you guys have questions, please send them over. We have some cool examples. I don't know, Patrick, if you want to comment on those. I think
I will comment on this. Show this, and I will comment on this.
Sure. I think we start from the SPX, right? Here we see basically, obviously we open lower, kind of put support, acted as support in this case. We see like a retracement back, and then obviously the price kind of like stops right here at the high vol level, and then kind of drops all the way through down, even crossing the 1-day minimum for the day.
So what we can see here, and this is something what I'm doing very often. If you have trading view, you can go also in the futures. If you're trading the ES, if you're trading the NQ, you have the option that you can change the time. You can change extended time or market time, or that you can see only the stock market open. And when you have the stock market open, this is really, really cool feature. The same what we see now in the SPX, because we see first a down gap. So we see the down move, and we open below the high vol 0 DTE. So basically what Fabio was telling us, so we are now in a negative area based on the 0 DTE's next day expiration. And also we stay all the time when the market was open on a negative high vol area, what we have also here. And everyone who knows me, that my personally setup, how I will set up this is, my A plus setup is always target the high vol levels, maybe the high vol 0 DTE or the high vol, and go with the momentum and target the 1-day min or the 1-day max. Today, it was the perfect example. And if I would be trade SPX, I'm not an SPX trader, I'm an NQ and NDX trader, by the way. I will use the gap what we have, the beautiful gap, as my max loss and then target the 1-day min. This would be my personally setup for today, how I would trade this, because I know every time when we come to high vol area, as Fabi was mentioning, I mentioned this also, for me, it's a money printing level. Why is this a money printing? We can see reaction. We can see really nice reaction. We can see really strong reaction, like what we see to the downside, or we see it to the upside. And you have the option with Mentor Q that you can looking back. So you can now looking back for the levels for 5 days if you're going into the Discord. And I will highly recommend to this, observing the levels every time. When we have the high wall levels, you will see there's some price action. Sometimes we have the pin effect. This is why I would tell you waiting for the follow truth before you execute your trades, or have enough room. If you're trading the indices or if you're trading the futures, you need a proper risk management. You need much more room that the trade can breathe and that the trade can be run. And then let it run and target maybe the 1-day min or the 1-day max based on the momentum. We have also news today. We're getting economic data. It's giving us the last push. We're seeing that the Magnificent Seven is also red. Nvidia was on pressure. Nvidia was leading all the last day. So everything was in the favor for the downside. And if we touching the high wall and everything is in the favor, the economic data is in the favor, the Magnificent Seven is in favor, Nvidia is in favor in our direction, take it. It's no financial advice, but this is how I would trade this. Take it. And we have other examples where we have exactly the same. NDX, perfect example. And I would tell you something based on my experience. We were speaking yesterday about the areas where are really strong, where we have levels together in one area. Look at this. We have call resistance there. We have high wall 0 DTE. We have put support and we have high wall there. I will wait. If I see something like this, I will wait until we're getting follow through from the levels to the downside. I will not betting on this because the levels are too strong for me, or I will place my stop loss below the levels. Same what was the setup on the SPX. We have the gap, use the gap as stop loss, and then taking the momentum. This would be my personally one plus setup. This is how I was trading this today. I was doing this together with one of our members today. We had a live trading session together. We was doing this together. It was really powerful, and that's something what I can tell you personally. If you want to become successful with Mentor Q, there's only one way how you can become successful. First is learn and understand how Mentor Q is working. This is why me and Fabio, we invest so much time for you, and we are always be able that you can set up calls with us or group calls, that we can help you, that we can teach you, that you can understand Mentor Q. We have also all the documentation there. We explain really everything for you. So that's really, we make it really as simple as possible to understand for you. By the way, the wiki is like a book. It's crazy what you find everything there. We have also the academy. And if you understand Mentor Q, the second step to become really successful with Mentor Q is observing. Observing the levels, if you plot the levels, if you trade the levels, observing also the effect for net GEX, positive GEX, negative GEX. Observe this and understand a little bit more, connect the dots. And then look at this, how Mentor Q can help you to improve your A+ setup. Look into your trading journal where you was really successful with, and then implement this in your trading journal and build an A+ setup based on this. My A+ setup, if you would be asking me, always the high wall levels. If I don't see this, I will not going into the market. I'm not going into the market on put support. I'm not going into the market on call resistance. My one and only money printer is high wall. High wall 0 DTE, high wall. I set up my alerts. If it reached, boom, perfect. I'll be there. If not, I'm not there. So simple and easy. But I know exactly if we touch this and I will be smart, and I understand the market, how the market is going now. I can make money, and this is why it's my money printing level.
Yeah, thank you. And here we have another great example, Patrick, on crude oil from this morning. So we have, like price is dropping, touches the high vol level right here this morning, massive push all the way up, rejection right at the high vol level 0 DTE, and then now we're kind of like consolidating down here on JEX 4. Yeah.
And also we have Tesla. We have Tesla earnings today. Tesla was also a nice example. We're having the same principle today. We was touching the high wall 0 DTE, boom, and then we're getting the down move straight on the open and write it. So
yeah, and again,
and also I forget something. If we're looking to the left side, what is the high wall 0 DTE telling us? So it's a nice support and resistance area. So
yeah, right here. Yeah, so those are a very good example. Let's see if we get some questions. So, question from GSD: are you treating the high vol level as the flipping point, even though it has not crossed the zero line? So, I think when we look back at the curve, we see, like, if we go into our Net GEX chart here, yes, you basically, this would be the flipping point. So it's kind of like when the curve flips from negative to positive or vice versa, and here you have that cut through point right here. So yes, the idea is the same. The model is calculated a bit different, but the idea is exactly that one. Okay, so then yes, I mean, implied volatility is probably one of the key metrics in option pricing. So absolutely, it's very key to understand how the market move, and is also an input that we use in our swing model, in our 1-day expected move indicator. So absolutely, monitoring implied volatility is very important. Another questions. Yeah, very soon we're just planning the new release. So we are working on the upgrade for Sierra Chart and NinjaTrader. So we'll release them at the same time. So we just need a few more time, but it will be available very soon. Thank you for the question. And this one, I'll pass it to you, Patrick.
Ahmed Rana, how much time we should wait if it reclaim a high wall level? So I have two setups on my mind always if I'm trading this. So and I will share this with you now. So my first setup is if everything goes to the downside, what we was having today, I will not wait. I will going into this with a proper risk management, with a good stop loss who can breathe and who I can say, okay, it's good for me. But this needs capital. If you have enough capital, then you can do this. Then you can go small size. Then you can have enough room for the stop loss. So everything is fine in this case. So this is what most of the time I'm doing. But I was also observing, because I'm observing many times the levels, is if you're going to a higher time frame, let's, for example, 15 minutes. I like personally the 15-minute time frame. If you're going to the 15-minute time frame, maybe Fabio, you can do this very quick. If you're going to the 15-minute time frame, I would say most of the time, if we're hitting a level like the high wall level, waiting for a retest and then the follow truth. So this would be my number one, or waiting for the follow truth. And then if you have to follow truth, set your stop loss above the high wall level. that would be one of my two setups, how I would use this. Number one, have a bigger stop loss, but it needs capital, smaller position size. Or second, go to the 15-minute time frame, waiting for the follow through. If the 15-minute candle is closed, see if we're getting a follow through, and then place the stop loss above the high wall, or wait for the retest and then take the follow through. But it's really depend on everyone how they have the playbook, what setup they're looking for. This is only how I will trade this. There's
Yeah.
also no financial advice, so it's my playbook, how I'm find very success with this. But
Yeah.
everyone is different, and everyone have different trading styles. Yes.
I think we have a follow-up question from Michelle. So again, what happens if the price never crossed the level? Does it mean that you don't trade for the day, or how do you play that?
What happens if never cross high wall? Yeah, then I'm not going into the market. I'd be really picky at the moment. I'm really picky. In the last few years, I was really, no matter what, I take the trade. But now I become older. So look at this, I get gray hairs. So I'm 40 years old, man. I become a very old person now. So for me, it's more like looking only for really good setups, your A plus setups. And my A plus setup with Mentor Q is the high wall levels. And why I'm love this is I have the opportunity to 90% to print really good money. And I know exactly where I'm looking for. I know exactly what I can be risk and then take it. And the good thing is we were seeing this today. We're getting the opportunity very often. If someone is on the high wall level, like today we have SPX there. We have also NDX there. We have someone from the Magnificent Seven there. It was Tesla. There are so many opportunities on one time. So
Yeah.
if I would, I can now place my order on NDX. I can place my order on SPX. I can place my order on Tesla, and also on Crude. There was also some really nice example. It will be if it touches one times, you will get the opportunity few times and few markets. And this is something why I should be spent all the other days. Like if this shows up one time every week, why I should spend some time the other days where I will have maybe not the good opportunities like this. But other would be say, man, I like more call resistance. I like more put support. Everything is fine with this. Everyone have his own trading style with Mentor Q. You can go in our Discord and I like this. I'm not so active anymore, but I'm reading everything what you write down in the Discord, in the trader chat. And the funny thing is everyone have different strategies. Someone is using bookmark, someone is using order flow, someone is using this, someone is using that. It's so nice. So this is why we all loving trading.
Yeah.
Everyone is having his own ideas, but at the end, if you be consistently profitable with what you're doing over many years, then that's perfect. Then you have an edge in this. And this is something where everyone should be looking for.
Yeah, and I think let's go back to maybe one of these questions from Amit. Can you explain a little bit more on IVO level and how the JEX impact changes? So I think if we go back to our slide right here, the biggest concept that you need to understand is the changes from positive to negative gamma and the changes in the way delta hedging is done if we are in a positive or negative gamma. So as you can see here, you can read this chart, and we also have documentation about it on the website. But basically, when we are in negative gamma, the volatility tends to increase. When we are in a positive gamma, the volatility tends to decrease, right? So knowing that level allows you to understand, okay, like what could be the impact if the price moves to the downside. So we've seen it like very easily here. We saw like a massive kind of spike down, but I think we also had it on ES, where I think I was looking at it this morning. Yeah, so look at this. We were above the IVO level for the morning. obviously low volatility, and then suddenly we broke down. Obviously the news, like Patrick mentioned, kind of like accentuated the move, and we saw like a very strong pullback down here.
Oh, Fabio, can you go to the time where you have the clock on the bottom on trading view? It's on the right side. Where's the time? Down, down, down.
Okay.
And then you see ETA, but you can change this from ETA to use the regular trading hours. If you're trading only the New York time, then you see also on the futures the gap. And if you have now the levels there, you see the gap directly. You get a much better idea if you're using the futures, and if you're trading only the US stock market session. I will highly recommend to this. Use this to see if there's any gap, and if we are on some level like put support, if we be strong below put support with a gap or high wall. Now we have the high wall with the gap. Perfect. It's the best example ever. Use this. You can use the normal time to get an idea where we are, but if the US stock market is open, use this. It's very powerful.
Yeah.
And GSD, can you use the do the SPX and ES or QQQ and NQ typical cluster? That's a really that's a really good question. I think Fabio can tell something about this.
Yeah, I think not necessarily, because again, if we go back into our Net GEX chart, we can open up our SPX, we can open up our ES1, and then you mention, and we can open up our SPY. So if we look at correlated asset, we have those three assets: one ETF, one index, one future. So you can clearly see that the net gamma exposure chart for those assets is different, right? And the reason is very simple, because they have different option chain, and they also attract different customers. So always think who is trading SPX, who is trading SPY, and who is trading the ES futures, right? So if we look at SPY, most likely we will see like large asset managers, pension funds, even retailers that are using the ETF into their Fidelity accounts or Schwab, etc., right? But you see a lot of like longer term investors trading SPY. If you then go back to kind of like SPX and ES, here you see more like shorter term traders that are using futures for hedging purposes, or they're trading options on SPX. So the option chain is different. So it doesn't necessarily mean that the high vol level will be on the same level. So it could be that they are on different level, absolutely. Let's see if that was clear. Let's see if we get more questions. So first of all, while we get more questions, supporting documentation about this. So if you come back, and again, I would also like to answer your question here. Are you on Discord? Yes, we are. And if you go to this link and you create a free account, you get access to the account dashboard right here. You get access to the free Discord account, and you get access to all the documentation. But within the documentation, if you go under guides and you go under gamma levels, here we show you all the different levels that we have. We have the high vol level here. We show you like documentation. We show you a video, how to find, whether we're positive, negative gamma, and how to read the chart. But we also have like use cases. We have like knowledge base. We have strategies right here, case studies. So there's a lot of documentation there. On top of that, we also have our academy, and the academy, we have our free academy. So if you're creating a free account, you can access all of that. And here we have, for example, our gamma levels. So right here is where we're going to have all the videos about gamma levels, but you also have how to use the MentorQ models right here, and then how to trade with MentorQ right here. So those are all free. There's about, I think, 70 lessons that you can access right there. And then finally, we also have our screeners. So the screeners are for our premium members, but here we have our high vol level screener. So every day you'd be able to get a list of stocks that are closing, so that whose price is actually approaching the high vol level right here. So here we can see, like, for example, Upstart, Dollar Tree, like we have all these companies that are really approaching the high vol level. So that can give you some ideas on stocks that could potentially move, that could potentially approach that level. And then you can kind of go into our membership to kind of find more information about those companies. You can come and look at the levels and basically see how they react throughout the day.
Yeah, and I like also the question from you, GSD, about the cluster and everything like this, because only if you ask as community, we can help you. And if you're not asking so good questions, so then how we can help you? But I will give you some golden nugget. What I will also looking like, so if I'm most of the time day trading NQ, the Nasdaq. But I know exactly what's going on in the NQ. So for me, one of the important stock to follow is NVIDIA. And if NVIDIA is also on the high wall level or high wall ZODT level, and NVIDIA have now the potential to move the NQ and the Nasdaq, as everyone knows, then I know exactly that I have now focus on NVIDIA. And if NVIDIA breaks this with strong momentum, I know exactly that the Nasdaq is good for 100 points. And basically, then I plan my trade on the Nasdaq based on NVIDIA high wall level. For example, the same is also that I'm looking on the Spider ETF if I'm trading the NQ. So where's the Spider ETF? Is there some correlation what I can use? Also, don't forget we have also the VIX. The VIX is highly important. Where's the VIX at the moment? Is the VIX in best case also on some high vol ZODTE level where we can also use for our NASDAQ trade? So you and this is why we was developing at the end the blind spots, that we have everything together, but it's not the blind spots session today. We was making many sessions about this, but what I want telling you is looking also in the major ones who are really important for the Nasdaq, and I'm looking in every day, and I set my alerts based on this on for the Nasdaq, for the SPY, for Nvidia, and for the VIX. And if some one of them approach the high wall level, boom, I be there.
Yeah.
And then I know exactly what's going on.
Yeah, and we see it clearly here. Like, look at the break right here. We saw like a very strong kind of momentum to the upside after the break.
Yeah, but more important is that we bounce back from the high wall and put support CODT before. I think that's much more important on the downside.
Yeah.
This is really important, and then you can connect the dots. So the VIX high wall is now there, so it's in the play. We're looking to the NQ. Wow, high wall. We have the gap on the SPX. We have it on the Nasdaq. Boom, perfect. We get the setup what we want. Then we have Tesla today. Normally, I will not looking too much on Tesla. Tesla, it's a mess for me at the moment. And for a few years, Tesla was my number one baby. But now Nvidia is my baby. But Tesla have now earnings. So Tesla is important. So Tesla, high was UDT level, boom, we got it. So we're connecting the dots. We see VIX, we see Tesla, we see SPX, we see NDX. Come on, let's go.
Yeah.
Proper risk management and the shot is valid. So that's what is in my mind.
Yeah, it's a good point. All right, let's see if we get more questions. Let's see. No more questions. One more. Yeah. So Exactly. Yeah, Tesla. Yeah, of course. Yeah, if we go back to Tesla right here. Yeah. Yeah, it was a very important level for Tesla as well today.
Yeah. But the show will be going on after the bell. So then we get the show. The show will start again.
Yeah. Yeah, of course. And also, like, remember, I think we talked about Tesla yesterday. We had a live session about Tesla earnings yesterday. You can find it in our YouTube channel. But also next week, we're going to have the big earnings from the big tech company. So that's going to be very interesting as well.
I think Ahmed was asking a really nice question, Fabio.
This one. Can we club all levels in one indicator? Yes. So we actually have a very good breakthrough that we did. So hopefully at the end of November, we're going to have the ability to have all the levels automatically updated for you guys. We're going to try our best there. But yes, that's we're definitely working towards that so that you don't have to actually copy them every day, but we are working towards a solution there. We're also going to have more integration coming up. So we're going to integrate directly to obviously Ninja, Sierra, Quantower, Bookmap. We're working on more, so stay tuned. Everything should be released in November, at the end of November, during Black Friday.
Michelle, I love the levels. Not sure I have grasped how to fully read to use them. So thanks for entire session. Yeah, I would say look also into the put and call resistance session. Now we have the high wall level. Tomorrow we will speak, I think, 1 day min and 1 day max, and then over the GEX levels, and then give you the time, observe the levels. So maybe now you have an understanding more about high wall ZUDT and high wall, but look back. So now you have the 5-day levels from us in the Discord. Maybe plot yesterday's levels, maybe plot the levels from the day before, and then make your own little backtest and observe what was going on, and look also what was happened with NVIDIA, what was happening with the NDX, SPX, see the correlation, how the market works together, and then depend on your trading strategy. Look if something fit your interest based on your A+ setup, and then observing, learning, and then execute.
Yeah. And I think, Michelle, to go back to, we are always building more and more supported documentation for you guys. So if you go into the academy, most of your questions should be answered there. But if you have more, please come back to us. But if you go, for example, from on the gamma levels course that we are going to basically slowly integrate. So yesterday we did the put support with the core resistance. The video from today will be there. But we also have really how the gamma level works. So this will give you a lot of information on how to use them. And then obviously we are spending time to go through each single level every day so that you can then learn, okay, when you see a chart, I know exactly what that represents.
Yep.
Good question from Ian. So yes, Ian, if we go back to our presentation, I think we also covered it yesterday in our core resistance and put support level. We also have 0 DTEs levels. So the difference between the IVOL level and the IVOL level 0 DTE would be that the 0 DTE will only look at today's expiration. In the case of indices, ETFs that have 0 DTEs and futures, the 0 DTE level on Tesla would look at the next Friday expiration. So the IVOL level is only calculated looking at the gamma profile of those options expiring on that expiration. The IVOL level without the 0 DTE is really looking at the whole option chain. So obviously it takes in consideration also all the different expiration in the future. But the 0 DTE flow becomes very important because is much more sensible to price movement. So if the price really moves towards those at the money or in the money strikes, then you see basically a lot of sensitivity there. That's why we see also these big moves that are sometimes triggered by zero DT options. Again, Michelle, I wouldn't say that one is stronger than the other one, but the zero DTEs can have a strong effect, especially if the price kind of moves towards those levels that have a lot of exposure throughout the day, because there's less time to expiration. So I think it's important to, and I think we covered it in the session yesterday as well, and the day before. So please go back to the videos, because we try to explain how the zero DTs level work there. So the concept is really the same, where there's less time to expiration. The delta is more sensible to any price movement. So any like movement of the spot price throughout the day can really cause the delta to change very fast.
And I think that that's the main concept of what you have to understand when it comes to high vol and high vol zero DT. It's all about the hedging. What is now under pressure from the market makers? So we have to flip. So it's positive to negative gamma. So we're getting more and more pressure. So this is one of the compensating, and this is why I'm loving this, and this is why my focus is based on the high vol levels, because I want to be in the area where we get the most pressure.
Yeah, and also like Michelle, if you go through our guides within your account dashboard, click on knowledge base, and here we have a lot of documents on delta hedging. So if you don't know, for example, what delta hedging is, come here and click on the documents. This will be explained very, very simple on how it works, how do they have to hedge to stay covered, and then we have a cheat sheet, and we have a lot of other documentation. So positive, negative, gamma. We have documentation here. So we talked about that. Here you see all the things that you need to know to understand the concept, basically. So everything is right here for you guys.
My son would say hello.
All right, let's see if we got more questions. So again, if you don't have an account, you can create one for free, and you can access all those tools that we showed you. You can access the guides, you can access the free academy, you can access one of the free screeners right here. Everything is really there for you guys. The free courses, again, by clicking here, we'll have a lot of information. We show you how to use the level. We show you how to use the different models. We show you how to create your trading plan. Any training on how to use the product will be there. If you have any questions, please send them here, info@mentorq.com. And to thank you guys for being with us live, we have a special coupon code available until the end of the week. This is available only on our yearly plans. The yearly plans can be accessed here by clicking on the yearly plan, and you can apply the coupon on the basic or the premium. And basically, the yearly plan will also give you access to all the premium courses. And I just want to stress the importance of that, because especially if you want to learn how to kind of trade, we have some live session that we did with Patrick at the end of August. We have about 27 live sessions right here. So I think one of the questions before was, can we do more live sessions? Well, we have 27 right here, where Patrick really shows you how to build a setup, how to create a roadmap, how to create your trading plan. So very, very important. That would be part of the Premium Academy there.
Yeah, and the session where I was speaking about this was building the roadmap. And I think in next month, we're getting also some new exciting stuff. So we will launch some new stuff, I think, Fabio, yes. Yeah. And based on the launch, so you can be 100% sure that I think about Fabio about this and with the team, how we can help you. So maybe be doing again a roadmap session, or be thinking about maybe doing 1, 2, or 3 live trading sessions, so that you get an idea about how to trade the levels. So there will be something coming. you can make sure that we be on there. There will be something coming that you will be much more understanding the levels and the effect on the levels. And GSD, you were saying about the high vol levels, are they also effective overnight? Asia session, London session, 100%. They also will. There's no time limit. So if you see in the Asia session that we came to the high vol level, it's the same effect. It's exactly the same effect. I will highly recommend, if you be not a member, maybe take the shot with the discount code 40%, maybe the basic, maybe the premium, whatever you want, or take the monthly with a trial and test the levels and look back in the past, what was happened. This is what I mean with observing and learning, understanding the levels. And you will see also on the futures or on the indices or on gold or on crude or on Bitcoin, whatever you love to trade, or maybe you trade the spots, it will have the same effect. And this is the beauty for it. You set up your alert and you will be there if this will be happen. And that's it.
Yeah, and I think just to give you some roadmap item, at the end of November, we're going to introduce our intraday gamma levels, and we're also going to introduce some updates on integration. So there's going to be a lot there. But yeah, basically, we're going to do that for indices, ETFs, and stocks. So again, like looking at Tesla today and tomorrow. Today we have earnings. How will the market change tomorrow throughout the day, and how is the market adjusting the levels? You'll be able to get an update intraday for that. So very excited. I think it's going to be a game changer.
All right. And if you have questions, ladies and gentlemen, write us an email, info@mentorq.com, or contact me or Fabio in the Discord. Day trader Patrick and Fabio, you know him.
Yeah.
And then we can maybe set up an individual Zoom call with you or group call if you're getting more questions about this. We are always here to help. So, and maybe Fabio, before we close the call now, can you go in the Discord again and giving us a review what was happened in the last few days in the member success? I think we're getting good stuff what we can share when people are sharing his success with Mentor Q, how they're trading the levels. So there are many traders out there who are getting now successful in a prop firm and private with investors. So it's really amazing, and they trust us and they follow the levels, and there are the traders. So you see this, you can contact them and you can ask, hey, how you using the levels, how you was able to play this. So we are a community, and you should use the community. That's power. You should use it. Use the power, use the community of the power. Ask. Everyone is helpful. So our community, and this is something what I really love. If you have a question, it's very helpful. They're helping each other, and this is the spirit of a team. And someone have different concepts. Someone loving more order flow. Someone loves this, but at the end, we're trading all the same. And maybe you will be not agree with some trading style. Sometimes I'm also not agree with this trading style, but there's always some golden nugget what I can learn. And that's the beauty. All right.
All right. Thank you very much, guys. I hope this was helpful, and we're going to be back tomorrow for a session on the 1-day minimum and 1-day max. Very important and relevant indicators. So stay tuned. And thank you so much for joining.
Have a good one. Bye-bye.
Bye-bye.